We talked about motors in relation to electric vehicles yesterday, with an emphasis on the price of motors in automobiles with internal combustion engines, ICEs. A motor in a conventional internal combustion engine car usually costs about $5,000. The interesting part, though, is that Tesla can manufacture a motor for only $1,000. This is a remarkable increase in cost effectiveness, particularly in light of the fact that the current auto industry has been mired in conventional practices for many years, with automakers continuing to operate in the same manner. Their operations are static since they are accustomed to using outdated methods and aren't necessarily searching for new and creative ways to save costs. However, Tesla has figured it out. It's not only about making automobiles cheaper, it's also about making everything more affordable, from the motors to the manufacturing process and the technology employed. Other businesses have been producing motors that cost $5,000 apiece, but Tesla's strategy lowers that figure to $1,000. Additionally, they use state-of-the-art technology, such as battery advancements that can lower production costs overall. Why then, will this change result in a sharp increase in Tesla's stock price? Ron Barron, a multi-billionaire investor, believes that it will climb significantly and that now is the best moment to invest. According to Barron, Tesla has a lot of promise and its path is far from done. Let's examine why he thinks Tesla's stock will rise sharply. Among the strongest arguments for Barron's optimism about Tesla's future are the company's developments in autonomous driving technology, its calculated maneuvers in the EV market, and its application of artificial intelligence, AI, to enhance design and production. To keep up with all the most recent information, be sure to like and subscribe to Tesla Stock News if you haven't already. Let's now examine Ron Barron's optimistic assessment of Tesla and the reasons behind his belief in its enormous potential. Ron Barron sold a sizable portion of Tesla a few years ago. However, he was worried about his exposure to a particular stock rather than losing faith in the company. Barron is still quite hopeful despite the sale, regarding the enormous growth potential of Tesla in the future. Furthermore, Barron's strong belief in Elon Musk's business endeavors is demonstrated by his prediction of a possible 20x return over the next 15 years for SpaceX. But for now, let's concentrate on Tesla. Barron's approach to investment management is to balance his holdings and avoid dilution, which means he makes sure that fresh investments won't outweigh the gains he has previously made. Tesla's shares rose 12% even though the firm reported the worst cash flow in its history and poor earnings for the quarter. Why? Due to Elon Musk's unwavering optimism in the future, especially his ambitions for more reasonably priced electric vehicles. Investors continue to be reassured that Tesla is on the right track by Musk's unwavering focus on increasing production and developing more affordable electric automobiles. According to Barron, almost all cars will be electric within the next 10 to 15 years, making electric vehicles the way of the future. He contends that, in the long run, hybrids are really a short-term fix. Barron claims that as the car industry shifts to entirely electric models, hybrids won't survive. What does this signify for Tesla in light of that? For starters, Tesla's dedication to affordability is revolutionary. Tesla may lead the way in the shift to environmentally friendly transportation and establish new industry standards by lowering the cost of electric automobiles. Barron adds that the market for electric vehicles is still expanding and that Tesla is well-positioned to spearhead this revolution by taking advantage of the rising demand as more people opt for EVs rather than conventional gasoline-powered vehicles. There are some worries, though. According to Barron, the main reason why Tesla's stock is down is because of speculation that the company may give up on its plans to create a low-cost automobile in favor of robot taxis. Investors are concerned that Tesla's competitive advantage in the mass-market auto industry may be weakened by this change in approach. These worries were further heightened by rumors that Tesla would close a new factory intended to produce these inexpensive cars. However, Barron is still optimistic, stating that despite immediate difficulties, the long-term growth potential are still very much intact. Barron also draws attention to the competition in China, where leading automakers Ford and General Motors are still losing money on their electric cars, while BYD has become the sole profitable electric car manufacturer. This only serves to strengthen Tesla's position as one of the biggest and most lucrative EV producers. Barron also discusses the opposition to change in the larger automotive sector, specifically with regard to cost-effectiveness in auto manufacture. Instead of looking for new and creative ways to cut costs and boost production efficiency, traditional automakers are frequently set in their ways and concentrate on what has worked for decades. In contrast, Tesla is always changing and seeking methods to improve, lower costs, and increase efficiency. Barron thinks that Tesla's cutting-edge production methods and emphasis on both affordable vehicles and driverless taxis will drive the company's stock to new heights. The infrastructure of Tesla is one factor contributing to this optimism. Up to 3 million cars can presently be produced by Tesla each year, and with no extra capital investment, the company could generate an additional 1.2 million cars within its current facilities. Because they currently have the infrastructure in place to grow production quickly as demand for their cars rises, Tesla has a significant edge. A key component of Tesla's long-term success is their capacity to grow without incurring significant new capital expenditures, given their target of producing 5 million cars annually. However, Tesla has more in store. The company distinguishes itself from other automakers with its focus on self-driving cars, robot taxis, and cutting production costs while increasing output. Because it keeps incremental costs low by utilizing existing facilities and growing production without requiring a large capital expenditure, Tesla's growth is more sustainable. Furthermore, Tesla is using AI and data to transform not only the way they build cars, but also the way they design them. With more than 6 million cars on the road worldwide, 3.5 to 4 million of them send data back to Tesla's systems on a regular basis, giving the business access to a vast amount of data. Training AI models, improving autonomous driving technologies, and enhancing the intelligence, safety, and efficiency of Tesla vehicles all depend on this data. In order to establish itself as the industry leader in autonomous driving, Tesla must be able to handle this enormous volume of data while also consistently improving its AI and processing skills. Tesla is making sure that its infrastructure is always ahead of the curve and capable of handling even more data as the business grows, with the goal of doubling their processing capacity every 90 days. In addition to speeding up the creation of machine learning models, this quick increase in processing power aids Tesla in continuously enhancing its AI systems, which is essential for reaching the autonomous driving capabilities they'd hope to provide. The ability of Tesla to incorporate this enormous volume of real-time data with their AI algorithms has been one of their biggest innovations. Every Tesla car on the road functions as a mobile laboratory, continuously providing data that helps Tesla make its products better. In addition to keeping Tesla ahead of the competition, this creative strategy is establishing a new benchmark for how automakers may leverage big data to improve product capabilities. What sets Tesla apart is its transition to a data-driven, AI-powered approach to auto development and manufacturing. These days, the focus is on developing intelligent, self-driving cars that are always learning and getting better. With this strategy, Tesla has established itself as a technology company leading the AI and autonomous driving revolution in addition to being a car manufacturer. What does all of this signify for the future of Tesla then? According to Ron Barron, the company's creative manufacturing, data use, and autonomous driving technologies are ready to propel the stock's explosive development. Tesla is in a strong position to lead the industry in both vehicle manufacturing and artificial intelligence developments as it expands its business and improves its technologies. Barron saw Tesla's developments in autonomous driving technology up close when he visited the company's facilities. Without human assistance, Tesla vehicles were able to deftly handle challenging real-world situations, such as managing heavy traffic or responding to pedestrians crossing the street. This high degree of operational competence highlights Tesla's technological superiority and its capacity to spearhead the revolution in autonomous driving. Financially speaking, Barron is certain that Tesla's distinct business strategy, which combines state-of-the-art technology with effective production techniques, puts the company in a strong position to benefit from the rising demand for intelligent, driverless cars. Tesla will reduce manufacturing costs, improve operational effectiveness, and raise profit margins as it keeps incorporating autonomous driving technologies into its cars. To sum up, Tesla appears to have a very promising future. The company is laying the groundwork for substantial growth in the upcoming years with advancements in AI, autonomous driving, and vehicle manufacturing. According to Ron Barron, the moment has come to invest in Tesla and take advantage of its success as it continues to transform the auto industry. As we conclude today's video, we'd like to know what you think of Tesla's approach of emphasizing both affordable cars and robot taxis. How do you anticipate Tesla's use of AI and data influencing the future of the automotive industry? Leave your opinions in the comments below, and don't forget to like and subscribe to Tesla Stock News for more updates on all things Tesla. Thanks for watching.